American Eagle got 44 billion impressions from one campaign. However, their Q1 sales still declined. Here, we're going to talk about the pattern, the lightning rod strategy, the name pattern behind one of 2025's most studied, most controversial campaigns, which is the Sydney Sweeney campaign for American Eagle. We're going to talk about the data and also the forecast, the 6 to 12 month expectation of what you could see in this strategy, whether it will work in the next 12 months, and the question, the phase 2 question every fractional CMO and sales leader needs to ask before pitching this to their client. Let's dive in. So what is rod strategy? Well, we're going to watch a video and I'm going to show you exactly what it is. The core idea is that a brand selects a culturally polarizing creative choice and lets that controversy do the distribution. The argument is actually the engine, and the brand just builds the container. And that's certainly the result. This was a massively huge spike in traffic and impressions, and also lots of cultural engagement for the last year. So, what did American Eagle do? They cast Sydney Sweeney, chose a tagline with a genetics pun, confirmed the casting was deliberate, and stayed silent when the culture war started. And what separates us from others is that the brand never defends the campaign. They let it be what it is, and they did not pull back any of the controversy or apologize. The controversy is the strategy, and the moment that American Eagle explained itself, the campaign was over, and they never had to do it again. So the results were 44 billion impressions. Total campaign reach from earned media alone, 38% stock surge. The share price increase in days following the launch, and 1.36 billion in revenue. Holy cow. Q3 revenue, a record quarter for the American Eagle brand. And so what's the play? They built a container for an existing cultural argument. The argument did the distribution, and they collected the impressions. So we're going to watch just a little bit of this ad campaign. It's actually very short, highly controversial, and there's a few things I want you to notice, either as a good copywriter or a good marketer. First off, the pun is the entire campaign. There's a play on words here between great genes, as in Jeans, and then equals great genes, that is your good genetics. One wordplay carries all 44 billion impressions, no slogan, no benefit claim, just a double meaning that forces you to decide what you heard. The second thing is a headline is a statement. It's not a sell. American Eagle didn't say buy these genes. They said the exact opposite. Sydney Sweeney has great genes. It's declarative. It's no ask. You're invited to agree or fight about it. The third thing you're going to notice is the casting room video is a meta move. Sweeney is auditioning for an American Eagle commercial. And inside American Eagle commercial, it signals we know exactly what we're doing, and that confidence is its own provocation. And number 4, no defense ever, no apology. After the launch of AE, they said nothing. The copy stops at the tagline, and silence is the final line of the ad. So here we go. I'm about to get into some trouble here. Let's play this.
I'm not here to tell you to buy American Eagle jeans. And I definitely won't say that they're the most comfortable jeans I've ever worn.
Don't say that.
Or that they make your butt look amazing.
She's not saying it. Can't blame
Why would
her.
I need to do that? But if you said that you want to buy the jeans, I'm not going to stop you.
I'm thinking about it.
But just so we're clear, this is not me telling you to buy American Eagle jeans.
Right.
Sydney Sweeney has great genes.
You see what I did there, right?
That's a fantastic copywriter. I'm not telling you to do this. Please don't do this. And yet people want to do it all more. So why this patch now? Well, 3 forces converged back 11 months ago in 2025 to make this work for American Eagle. First off, platform enforcement hollowed out. Brand safety infrastructure that had governed platform content policies for a decade loosened significantly between 2023 to 2025. Also a very controversial decade, right? From 2016 with Black Lives Matter, with the growing pandemic, you had a lot of tensions on the rise. Community notes supplemented human moderation on X, and the infrastructure brand safety terms relied on shifting away from them. Number 2 was bot amplified outrage. Threat intelligence firm Sayabra found 15% of the most negative backlash came from fake accounts with this. So the brand didn't engineer them, but those bots amplified the controversy far beyond the organic outrage could sustain. And number three, the media political ecosystem needed content. July 2025 was peak culture war velocity. Every political voice was hunting for symbols. A blonde actress in jeans with genetics pun was a perfect container. American Eagle dropped a creative choice into a moment already primed to combust. Now, looking at Google Trends data, we'll see that in the bottom below. It shows American Eagle brand search returned to baseline 10 months after the campaign. So the spike discharge and these conditions are already shifting. Let's see. Well, where else did this pattern work? I mean, if you're going to advise a client, you should tell them that, hey, this also worked in 3 other areas. Let's go real old school. We're talking 1929. Edward Bernays, American Tobacco Company, staged women smoking in New York's Easter parade called Cigarettes, Torches or Freedom, holding that up, and tipped off journalists in advance. Front page New York Times, no ad budget. The pattern is 96 years old. But right around this time, 2025 fall, Levi's came out with Beyonce, the Beyonce campaign. They cast Beyonce in styling that immediately drew comparisons to Marilyn Monroe. Megyn Kelly, Piers Morgan both weighed in publicly. Neither was paid to say that, and the earned media play ran exactly the same way. However, not nearly as successful as Sweeney's. And number three, Klarna CEO Sebastian, 2004, 2025. Don't ask me to say his last name. He announced AI replaced 700 employees. It dropped Salesforce. Did a deep fake of himself in a earnings call. No celebrity, no fashion, just founder willing to say the thing the industry didn't want to hear, and global news covered it every time. But should you actually utilize this pattern? Well, there's 4 questions you got to ask. First off, is the tension real? Is there a genuine existing cultural tension to drop into? Or would you be manufacturing one? Not a good signal for your customers. Number 2, who takes the hit? Does the potential backlash hit watchers? That's really bad move. Or actual buyers? Also a bad move. Map your client's customer profile against a political variance of the creative choice before you proceed. Number 3, is it phase 2 ready? UGC strategy, creator seeding, product conversion layer. The lightning rod sends people to the door. They still have to like what's inside, right? And number 4, can you stay silent when you hit controversy? Many brands can't, especially around race and eugenics and race. And it's just a very, very hot topic, right? The moment you explain the campaign, it dies. It removes the teeth of what actually worked with its magic. And this is a cultural organizational discipline question, not just a creative one. Now, I will say there's a red flag here too, the Bud Light failure path. If your client's core customer is the same demographic most likely to take offense, the backlash hits buyers. So stop there. That's a different strategy problem entirely. Now, how do you implement the lightning strategy? So we talk about implementation more in the newsletter, but there's really 5 steps. You got to find the tension, step 1. Step 2, you got to cast the container. Step 3, you got to build phase 2 first. You don't want people to come to an empty lot. Number 4, step 4, launch and say nothing. That silence creates an entire gap. And as they say in psychology, as one of my favorite mentors, Carl Jung, said, nature hates a vacuum. So when you create a vacuum, nature hates that space and wants to fill it. And as a good marketing strategy, others will fill it. And that's actually what you want. Number 5, let it run. Monitor, but don't engage. The argument is doing the distribution. Your job is to stay out of the way. All right, let's talk a little bit about the strategy signals take on this. What would I say about the Q1 data and what it actually says? Well, American Eagle's Sweeney campaign gets studied as a masterclass in earned media, of course, right? Study it inside as a masterclass in phase 1 execution paired with phase 2 failure. So they did incredibly well for phase 1, but then phase 2 it kind of fizzled out. The AEO Q1 2026 earnings, American Eagle brand comparable sales down 2% by Q1 following. The inventory was up 27%, products sitting unsold, and comparable sales to, let's say, REA to 25% no controversy campaign, community marketing. So, what is the verdict to all this? After looking at TikTok ads, Meta ads, looking at Google Trends, and a number of other marketing intelligence tools, the verdict is that the lightning rod acquired customers, and that American Eagle's Q1 data confirms that they didn't stay. So there is a bit of something that they could have learned here in Q2. The pattern works, the follow through didn't. RE's 25% comparable sales growth built on community marketing with no controversy is the control group nobody is talking about right now with this strategy. Everybody wants to talk about how big and how controversial this strategy was, but what about the sustainable brand strategy happening after it? So that's why you need a good, solid marketing team to do both. Now, the argument travels farther than the product. In 2029, Bernays generated front page New York Times coverage with the American Tobacco Company with one stage event. My read on Bernays is that he was a better PR man for his own campaign than he was an advertiser for his client. The 44 billion impressions figure may be American Eagle's version of that. The adversarial read is that, ChatGPT's adversarial framing put it plainly like this. The lightning rod strategy doesn't fail when people get mad. It fails when the argument travels farther than the product. And we saw this happen in the Q1 confirmation. Q1 earnings confirmed it. Comparable sales were down 2%. Inventory up 27%, just sitting there. So the argument traveled. The product didn't fully convert in Q1. And we see that large spike right here. Over here during the fall, actually towards the summer, you see that campaign spike. Then get into another campaign spike around Beyonce, a re-engagement of the Sweeney Sydney Sweeney campaign. And then look, just real stable, low spikes low there. So the campaign that generated 44 billion impressions declined in comparable sales next quarter. The pattern has a name, the copies are coming, and most of them still fail at phase 2. So where this pattern goes next, well, there's likely a few paths. So good strategy intelligence from marketing intelligence will give you some scenarios. They're not going to predict the future. I don't believe in predicting the future. I don't think it's really possible unless you're a prophet. That can happen. And there's basically 4 scenarios I want to share. I'm at about 45% confident on this first scenario. And that is for the next 6 to 12 months, you're going to see a post-peak codification phase. The lightning rod has peaked. Over 6 to 12 months, it gets taught, case studied, pitched by agencies who will skip phase 2 requirement entirely. That's a really bad move. Do not just go for the spike. Watch for 3 to 5 lightning rod attempts from fashion, beauty, and CPG in Q3, Q4 2026. Most execute phase 1 correctly and fail at phase 2. American Eagle's Q1 data gets misread as evidence, and the pattern doesn't work, which misses the actual failure point. The second scenario that I'm about 0.25% confident, this is 25%, and that is B2B migration. The lightning rod moves from fashion to B2B in the next 6 to 12 months. Klarna CEO play, founder as a lightning rod polarizing idea as the creative element, becomes the dominant version 26 to 27. B2B has lower celebrity costs, higher earned media velocity in vertical press, and less brand safety exposure. 3 to 5 high-profile B2B founders run Klarna-style plays, and one becomes 2026 most studied campaign. Scenario C, this is the authenticity correction. I'm about 20% confident that this will happen. Sayabra is finding that 15% of Sweeney backlash came from fake accounts, really insightful. The authentic earned media framing collapses. So the lightning rod gets reframed as a manufactured outrage with bot amplification. Academic desensibilization and research accelerates, and the pattern gets retired faster than scenario A predicts. Likely Q1 2027 brand safety teams backlist it before agencies even pitch it once. And about this, the fourth scenario D, that I'm about 10% confident in, is a volatility trap. Brands, in this case, will supply the controversy. Platforms, creators, political commentators capture most of the value, and the brand takes reputational risk while the ecosystem gets the upside. If two or three major brands run lightning rod attempts in Q3 2026 this year with similar post campaign earnings disappointments, then the pattern gets retired in brand strategy reviews across the industry. So you can see this right over here. Post peak, 45% agencies copy phase one and they skip two. They skip phase two. I think that's pretty likely. B2B migration, founders use it as lightning rod, use a lightning rod strategy. Authenticity connection, 20%. You're going to see a lot of bot amplification exposed, and then volatility trap about 10%. Brands take the risk, but they get disappointed. So already talked about what to watch for, but essentially four signals that will tell you which scenario is unfolding and when. That's Q2 2026 earnings around August this year, 2026, should be seeing comparable sales positive. Scenario A extends and flat or negative. Scenario D strengthens. This is the single most important data point. Second thing to watch out for is celebrity casting from Gap, J. Crew, or Abercrombie. We could see by Q3 2026 a lot of people doing scenario A, copycats arriving. They watch for polarizing casting choices from legacy denim and apparel brands attempting to replicate this AE playbook. But Cyber's bot finding in mainstream trade press, that still hasn't really been talked about as much as I thought it was. So that could be the trigger. We could be seeing more of that authenticity framing collapsing and people losing trust in that. And the fourth thing to watch out for is high profile B2B founder controversy campaigns. This could extend from 26 to 27. And that's a very early signal. A founder led polarizing announcement that generates vertical press coverage without celebrity spend. You could be seeing more of that as well. One question that ties all these four scenarios together is, does phase two exist before the campaign fires? Brands with phase two built are in scenario A. Brands copying phase one only are heading to scenario D. Hey, listen, it's Matthew from the Strategy Signal. See what works now and what will work in the future. Inside every issue, one campaign or pattern breakdown with verified metrics and cross-industry proof, a client-ready strategy deck and assessment framework that you can use for your next client, and a 6 to 12 month forward forecast with scenarios where the strategy is heading and which industries feel it first. Paid subscribers, they also get the client-ready strategy decks. They get the pattern lab, access to apply that pattern to live client work and other practitioners, and the annual and quarterly signal report, full year retrospective and market forecast. Thanks for now. Catch you.